Well, a reasonably lively open to the Asian markets today, certainly for the new trading week. And if you look at the equity markets, well, it's the ASX 200 here in Australia, which has probably come up to the most lively start of all. I mean, we've seen it trade through convincingly 5,800. We've seen a bit of rotation out of mining stocks. The sector's down very modestly on the day, and we'd probably like to see that reverberated through the UK stock market today when that opens, with mining stocks taking a bit of a backseat after a strong run of late. We've seen a bit of rotation into healthcare stocks. The sector's up 1.8% as I speak at the moment. That sector's been very much unloved of late, so we're seeing a bit of short covering and a little bit of organic buying coming through, people moving out of one sector into another. We're seeing financials dominating again. That's where the big points are coming through. Of course, the big four banks here in Australia make 25% of our index, so if of course you get some good gains there, we are going to see a decent amount of points contributed towards the overall index. And that's really where we are at the moment. I look at the momentum in our market at the moment, and I think we're probably likely to head higher. Certainly I wouldn't be shorting this market. I've said this for a while. The momentum is to the upside. The market's at the highest level in 19 months. Long positions or flat positions are preferred. Certainly shorting into this market hasn't been a particularly good trade. People have had to be very, very aggressive and cute on this market to make any kind of market returns there. So long positions still very much preferred. Whether or not we continue to see financials really dominating our market is something to be seen. I'm not so sure that the US banking reporting season, which kicks off this week with JP Morgan and Bank of America later this week, is going to have huge ramifications for our market, given that US banks are really the vehicle of all things reflation in the US markets. But, it'll be interesting to see if that kicks into our market as well. Elsewhere, we've seen some good selling of sterling. I think if you're looking at the currency market, we saw some comments from Theresa May over the weekend about the relationship with the EU and what happens to negotiations there. Sterling Aussie's been the big mover of the day. That's to the downside, and so that's one to put on the radar because it's broken through the recent bottom of the recent range, and certainly Sterling Aussie looks like it potentially could head a little bit lower this week. So that's very much on my radar. Aussie dollar hasn't really done a lot today, even though we've seen some really strong building approval numbers here in Australia, and the November building approvals up 7% on the month. But certainly Sterling Aussie's been the big trade of the day to the downside there. On the commodity front, we've seen oil prices modestly lower. We've got front month US crude down about 0.5% as I speak. We're seeing some more modest buying coming through in the bulks. Iron ore futures and rebar futures are up a touch. We've got coking coal futures up a little bit. We're not, as I say, seeing that being reverberated through buying in the mining space. Just a bit of backseat, that sector taking a bit of backseat. But overall, Japanese equities are closed today. There's a bank holiday going on there. We've got some modest buying coming through in Chinese equities. So a fairly lively start. Sterling Aussie, the big mover in FX. We've got ASX 200 certainly on the watch list, and that looks like it wants to head higher in the short term here.